Hello everyone, welcome into this webinar organized by SuperForex Broker. I introduce myself, my name is Rosita Furnari, I'm Italian, I'm an independent trader since 5 years, and today I want to talk about a new tool that you can receive with SuperForex Broker. This is a special promotion for all new clients. So, just a few words about SuperForex. SuperForex is a great broker that offers you lots of bonus, lots of opportunities. I simply invite you to visit the website of the Forex to see what kind of account you can open, what condition you can receive, and what advantage you can receive, because there are a lot of promotion for all of you, depending on the kind of account that you will open. The most important thing is that, as you can see from this little presentation, you have good advantages on swap and on spread. And another good opportunity is the fact that you can receive lots of bonus, and you can also choose a different kind of payment system. So it is very, very useful and very friendly for us as a trader. So let's take a look to our new tools. This webinar is organized to present you a new way of trading. You can use this tool with, first of all, with Forex trading, of course, but you can also use it with all the instruments that you like. What is the main purpose of this tool? What is that make it different from other tools? The fact that we look at the percentage of revenues. As you saw in the title of this webinar, I said that I will show you how to trade like an institutional. Why I say this? Because institutional are used to work with revenues, with returns. Maybe you have heard about the net change. The net change is the percentage of revenues, of movement, generally speaking, that the day, because the concept, the tradition is referred to the daily movement, and it measures how much today movement increased or decreased based on, in comparison with the close of yesterday. This is the historic concept of net change, the way that institutionals and professional traders use revenues. Now I want to show you a new strategy based on this information that put attention on three kinds of revenues. They are the daily revenues, but we also consider the weekly revenues and the monthly revenues. Why? Because in this way we can find a very important information, which is the first information that each trader needs to make a decision in the market and to enter a position in the market. What is the first thing that each one of us needs to understand as a trader? Okay, I'm starting the video on Facebook too. Okay, so just a little thing before continuing with the webinar. Oh, you are all muted, but please, if you want to ask some questions, please write in the chat and I will answer you. Okay, thank you. So I was saying, what is the first thing that a trader needs to know for making decision, for making a good decision? First of all, it is to understand what is the trend, how my preferred instrument is moving at this moment. Usually, the most used technique the most used technique that all of us know, that is taught in all courses for seeing the trend, is to look at highs and lows. As you know, an uptrend is designed by higher high and higher lows. A downtrend is designed by lower lows and lower highs. But sometimes this kind of information is not the best that we can receive. Why? Because, as you know, we can see different kind of trend depending on what is our reference time frame. Sometimes we can see an upward trend if we look at, for example, at a 30 minutes trend. In this case, we are observing the charts of Euro CHF value, and as you can see here, we have in this last movement, we have higher lows and higher highs. So we traditionally say that we have an upward movement, but this information is based on a 30 minutes time frame. But what if we look at the 1 hour time frame, for example? If we look at 1 hour time frame, we have the last movement is a downward movement. So if I need to have an idea what is the trend, what can I say? Is this instrument moving upward or is it is moving downward? I cannot say with objective information because I don't have an objective information. What I want to show you in this webinar is how to receive an objective information, because there is possible to find something that says us that the trend is long or short for each time frame that we observe. I suggest you to don't observe intraday time frames. Why? Because what happens in intraday is simple speculation. So we receive rumors, we don't receive very good information. Also when we want to scalp the market, of course, but the very good information is to check, first of all, on a daily basis. Okay, this is why we, in this tool, we used, first of all, the daily information. We work with daily information, weekly information, and monthly information, as I explained before. Because starting from daily time frame, we can receive objective information and we receive a good information for defining the trend. And when we have a good trend, a good information, when the daily time frame is moving, for example, if you look at the GBP OC, we have a daily candlestick, just a moment, please, okay. The daily candlestick in this case is red, so the trend for today is moving downward. If we look at the weekly candle, we also have a red candle, so also the weekly is moving downward for GBPOC. And if we look at the monthly candle, we have the same information. So as you can see, it depends on the point of view that we accepted when we look at the context of the market. Depending on our point of view, we can find a better information, a good information. In this case, looking at how price is moving, referred to the open price, for example, what is the color of the single candle in the single time frame, we have an idea what is happening. At this moment, we are selling GBPOC in the monthly time frame, we are selling it on a weekly basis, and we are selling it on a daily basis. We also have this kind of information looking at revenues. What are revenues? Revenues are, as I said before, the percentage of movement, of gaining that price received today or this week or this month compared to last day, last week, and last month. For each time frame, you can find information directly on the chart. From a 1 minute chart until 1 hour chart, we have information about the daily references. So, at this moment, I receive a selling signal on GBP/AUD because we have negative revenues on a daily basis. We are losing 0.10% at this moment on a daily basis. We have a downward trend, as we said before, but we also have a negative revenue of 1 percentage point on a weekly basis. if I choose a 4-hour time frame, I can see weekly references. And as you can see from the label, at this moment, on a weekly basis, this instrument is losing a bit more than 100%. And at this moment, we also have a negative return on a monthly basis. The amount at in this moment is losing 3.50%. Right? So I can see that the trend is downward trend because I have red on all the main references. Okay? You can find the analysis on the chart for all the time frames until 1 month, because the strategy is implemented for a medium-term analysis, short and medium-term analysis, of course. So, from this dashboard, which is named Square Dashboard, you can receive the information based on the trend. And as you can see, when we have a green button, we have a buying signal. When we have a red button, we have a sell signal. While when we see a green button, we don't have a unique movement. We don't have a direction, a specific direction. So these instruments that are colored by gray are instruments that is better to not to see, not to open the chart on this instrument. Okay, so the first advantage of this kind of tool, first of all, is this. We can observe all the context of the market in a single look. We don't need to open 20 charts, for example, to see what is happening on Aussie, on euro dollar, on sterling, and or on gold, or another instrument that we like to observe. We can personalize the list of instruments that we want to watch, simply clicking on indicator, square dashboard, input value. Here you can simply copy, or better saying, write with your hand the correct name of the instrument. So if you have a send account with SuperForex, you probably will have a letter C, or you will have a letter that specifies that your account is a send account. In this case, you need to look at the window of the instrument, to the market watch, and see what is the correct form, the correct name of the instrument that you want to see. And copy, you simply need to copy it on the value, input value of the indicator. Once you wrote here your once you create your list, you can save it, of course. You can also upload it in a second time, and so on. You can also have different lists and work with them as you prefer. By default, you can find a list with all the 28 main currencies, currencies, and plus you can find gold and silver. But as I said, you can choose what kind of instrument you prefer. Okay, I simply recommend you to be aware of the correct form of the correct name that you find in the market watch, because this is important to let the tool work at the best. Okay, so once you created your list, as you can see, you receive a signal referred to the opportunity that you can catch in the market. You look at the dashboard, and at this moment we know, for example, that the Australian dollar is strengthened. It is strengthening versus the Canadian dollar. It is strengthening versus the Swiss franc, versus the Japanese yen, versus the American dollar, and so on. The only exchange rate that at this moment is not good for Australian dollar is AUD and ZAD. But for the rest, the Australian dollar is strong at this moment. So What can we do with Australian dollar? We simply choose to buy. It is the best opportunity. I click on out cut, for example, and as you can see, with a click, I change the chart. So I don't need to open the chart, create a template, and upload the template, and so on. I simply have all I need ready to use, and I simply choose the instrument to work with and make my trade decision, right? For example, EUR/USD at this moment is going down. We see that we are at the minus. These are on a daily basis. We are touching the -1% on a monthly basis. How can I know that we are working monthly references? Because, as I said before, starting from 1 minute until 1 hour, you can find all references for daily time frames. This means that 0.25%, 0.50%, 0.70%, 1% positive and negative are referred to the daily movement. And obviously the daily movement is different from a weekly one or a monthly one. To see the weekly references, you simply need to choose 4-hour time frames. So in this case, the references are weekly level. On daily time frame, we can find monthly levels. This rule is the same for each strategies that you find inside one click. I now show you each strategy. You have 3 different strategies inside of this tool, completely automated, as you can see. I start showing you how to use percentage revenues and why they are, in my opinion, they are so important. By statistical research, I understood that percentage levels are very good levels for support and for resistance. If I enlarge the chart, look at this. In this case, we have on the chart, we can see daily references. I can also choose percent pivot. This is the name of the indicator that show you the percentage level. And I can also choose another kind of, another number of analysis. For example, I can choose 20 days. So I have a bigger history to watch too. And as you can see, look how price react when it touches this kind of level. As you can see, the level works very well as support and resistance. I show you with a little draw. Okay, for example, look at this. Price was moving in a narrow channel, but it touched, first of all, minus 0.25% and a plus 0.25%. Here, price break minus 0.25%. And what was the target? 0.50%, then 0.75%, and then minus 1%. There was a correction from the opening because the gray line is the opening of the day in this case. From the opening of the day, it was a little correction from the downward movement, and this correction worked with plus 0.25% level. Then price went down and touched minus 0.25%, minus 0.50%, and so on. As you can see, price reacts on this level. Also in the recent day, we can see the same reaction on level. And when there is a very strong movement, for example, in this during this upward movement, during this rally, you can also use a reference that you receive from percentage level to work with a different target. Or, for example, if you want to use a trailing stop, you can put your trailing stop, you can move the trailing stop from a level to another. And so, for example, if price touches 1%, when price touches 1%, you can move your trailing stop to 0.50%, and so on. You can use them to manage your position. You can use them as target. You can use them also to calculate your stop loss. Where is the best place for you to stop loss? Where the information is when price change the idea, and where the price changes the idea, where we can say that price is changing the movement. When price, for example, if in this case price went upward, the changing is when price started going downward, but from the max, from the highs, not of course, but from the opening. Okay, because if price goes down and break the opening and go lower, we will have a red candle for today, not anymore a green candle. So the information is completely changed. But when price moves, continue to move above the opening price, we can choose to continue to buy. Where? We can choose, of course, if buy the breakouts, or if we want to buy at the best, and we choose to buy the correction. Of course, the same is when prices moves downward. We can sell the breakout of each level, or we can insert a pending order on the recent level and sell the correction, and so on. Okay, this is just a little presentation, but we will organize other webinar, and I will explain you better how to use. We can also do some trading together. Okay, that's the first. Just a moment. Okay, this is the first strategy, and obviously the way you can use the levels is the same for daily references, for weekly references, and for monthly reference, of course. As you can see here, you can also find an oscillator, namely it is the RSI oscillator. The calculation of the oscillator is a little different from what we are used to see in the common use of the RSI, because here we use the RSI to see the trend. We simply receive an information of the positioning of the oscillator referred to the zero level, to the equilibrium level, which is the 50-point threshold. So when you see a red RSI, it means that there is a selling pressure, because the RSI is under the 50-point threshold. Of course, if you see an RSI that is colored by green, the information is the opposite. In this case, the RSI is above the 50-point threshold. So we receive the information that when RSI is green, we have a confirmation of the upward movement. Conversely, when the RSI is red, we receive the information that it is a good time for selling. But when exactly is a good time for buying or for selling? When we have a prolonged information. For example, here, in this case, in this day, price started going higher. We have the breakout of the narrow channel, we have the breakout of 0.25% level, and the RSI became green in this case. So the first candle I can have adapted that it is a real buying pressure, for example. But after 2 or 3 candles, I know that it is a really intention of buying from investors. So I can buy. But I suggest you to use 0.25% and 0.50% as a good level for entry your position. This is true for buy and for sell. Why? Because if you see what is the kind of movement, you can see that very often price react on 0.25, 0.50%, 0.70%. In this case is very big movement. It is rare that you find plus 1% or minus 1%. Okay, so I invite you to look at what is an average price, an average movement that the instrument does before enter a position, because it may be better, for example, to search for the correction. Okay. So this is something that I invite you to observe, because you can also create statistics with the kind of extension of movement. You can also work with volatility, and you can measure the volatility with this kind of levels. But we will see these in particular in other webinars. Now I simply want to show you shortly what you can do with this tool. The second chart, the second strategy is this one. I change the strategy simply clicking the button here. As you can see in the right corner, you can see three numbers, three buttons with numbers 1, 2, 3. Each number refers to and opens a different strategy. The number 1 button opens the percentage analysis. The button number 2 opens another strategy. And another strategy is opened by button number 3. The strategy number 2 is called HighLow, and in this case, we work with the highs and lows of recent periods. Again, the calculation is the same of percentage level. Starting from 1 minute until 1 hour, we work with daily references. With a 4-hour chart, we work with weekly references, and with a daily chart, we work with monthly references. As you can see, line levels are colored by red or by green, and if I touch the level with the cursor, with the mouse, as you can see, I received information. What kind of level is this? This is the high, the high of 1 month ago. This is this is the high of 2 months ago. This is the high of 1 month ago. Okay, this is the high of 3 months ago. The highs are colored by red because there are resistance. Of course, supports are colored by green because they are supports. So low are supports. For example, this low is the low of 5 months ago. This one is the low of 3 months ago, and so on. So you also have an information related to what, how many times this level was created. Obviously, the recent levels are a little bit important than all the levels, but anyway, if you work with levels of higher references, you have a very good opportunity to see the price reject from them, especially if it is the first touch. How can we work with this level? For example, at this moment price, this is EUR/D exchange rate, and at this moment price is moving in a narrow, is creating a narrow channel, and it is using the high of 4 months ago, level 1.6592 and level 1.6539, the low of 1 month ago, as a support area. This is the support area at this moment, but I draw a little rectangle, okay? This is our actual support area, of course. And what can happen if price goes down, if price breaks the support? What can be the target? It can be this one. We have another reference here, which is cursor, okay? Which is the high of 5 months ago. Okay, so you find here the levels the grid of levels that you can observe to to measure the movement of price downward and upward, of course, in both direction. You also have another information, because you can see here the average price of the period. The period is the same of levels. So on a daily the period of the average price is calculated in a proprietary on a proprietary strategy. You can find all the setup inside the indicator. The indicator is called MA in color. This is an adaptive moving average that changes automatically depending on what is the time frame you are seeing on your chart. In this case, I'm selected daily time frame. So in this case, with a daily time frame, I can see the quarterly average price, 90 periods, 90 days, okay? With a weekly reference, with a weekly time frame, I can see the half a year, 6 month moving average, and so on. With an hourly time frame, I can see what is the average price, the medium price of on 1 month, and so on. So you can see that you can also change the number, of course, but this is a different kind, a different strategy, a different calculation. Why? Because there is a cyclical, if we can say this, there is a cyclical objective, a cyclical target in the market that you can measure looking at standard time frames, which are daily, weekly, monthly, quarterly, 1 year, and so on. Because there is someone says that it is maybe it is not true, but I think it is really true, because we have statistics that confirm this, and you can find that there is the standard period of time, the standard reference is very, very important. So if you work with weekly levels, for example, why don't you look at the weekly average price? Because when you work with the normal average price, so if you can use an exponential average price or a simple average price, it is the same. You usually use 8 period, 21 period, for example. Yes, they work, of course, but you don't have an idea of time. With what time it was needed to create that kind of movement? You don't know. And this is important for you to know what kind of period we are working with. Why? Because we can also have an idea of what kind of trade we can manage. For example, if we work with daily references, so we use daily levels or daily percentage levels, daily average price, and so on, we know that our trade can last until the day ends, right? While if we work with weekly references, we have the possibility to remain in the market, to let our position in the market until the end of the week. If we work with monthly references, we have an idea of time that is based on the monthly reference. We know that our position, for example, in this case, we hypothesized a short position, a short-term trading. We can imagine that price will go down for the rest of the month, or the current month. So, as you can see, I work with levels, but I also have some ideas of the duration of the movement. What can I expect from the movement? How much time can it last? Of course, market can change idea on every day, but I have an idea, and I depend on that idea. I know what kind of size I need to open, for example, or how can I manage my position I know if there is a strong trend or there is a weekly trend depending on what is the percentage of revenue that the market gained and so on. I am conscious of what is happening in the market, and so I can better decide, I can better manage my position, and I don't trade emotionally, I trade with objective information. And so, of course, it is normal that also my performance is better. Of course, it is normal to take a stop loss, sure, but the number of stop losses is gradually reduced. Why? Because I know and I choose with confidence what to do, okay? Sorry, sometimes my English is not perfect. So this is about the levels of highs and lows. And now I show you how to work with the third template that is built around price action. Here you can find an indicator that is called Price Assistant. This is the name, Price Assistant. Price Assistant creates on the chart a second candlestick. As you can see here, you can find candlestick, of course, of greater time frames, greater references. The same logic of other profiles. On a daily time frame, you can see the monthly references. So in this case, we are seeing the daily movement, and we are seeing how the monthly candlestick is built. This is a very good information because we can see what kind of levels can be worked as support or resistance, because we saw before in the profile number 2 that we can work with highs and lows as reference for support and resistance. But as you know, there are in the candlestick, there are 4 levels that are very useful for us because all 4 levels are good levels for place the trade or the excite or the stop loss and so on. These levels are opening, close, low, and high. So we need, for a better information, we need 4 information, 4 levels. Okay? In this case, how can we work with this kind of information? If we look at the movement of Euro-USD, okay, the first target for the price is, of course, the lows of this month, which is also the lows of the month of April. They are the same, almost at the same levels. But when the price, let's imagine that the price will go lower, and so we will move under this this level. So we extend the downward movement. What can be the first target of this short? How can we track it? How can we check it? I say that the first target, the probable target, is this level. Sorry, this level. Why? Because this is the first level that price will encounter during the downward movement. Okay. If you look at this kind of information, we'll find something very useful, because especially when the price extend the movement for a great range of pips, and then there is a correction. Very often it is difficult to understand where the correction can stop. While using, on the contrary, if we use this kind of information, we can also understand where it is, there is a good probability that price will stop the correction. Let's check some example on the chart. Okay. For example, in this case, we don't have here in recent times, we don't have recent levels, so it will be difficult. But if we know that here we have at around 1.68 and 10, we have 2 highs, two monthly highs, and prices start going down from the highs with this kind of volatility, for example, we can imagine that this area will be a probable area for a rebound of price. Obviously, I'm speaking with the probability, about probability. I'm not sure, of course, price doesn't give the security, never, but we have an idea. This can be a good level for where price can stop the correction. It went down, of course, okay, it's okay. In this case, there was a great volatility and price extended the movement. But let's see another instrument, for example, GBP CAD. Just a moment, please. Okay. For example, GBP CAD, in this moment, we are moving downward. This is a daily time frame, of course, okay. If price goes down, which is price broke the lows of last month, which is the next target? Where can price go during this movement? Of course, in this case, we have the lows of the month of March. If price breaks the the lows of March, the next target will be the lows of October, last October, and so on. We can find some levels here in the past. At this moment, no. So we can manage our strategy using this kind of levels. Okay, but look at levels of January and levels of November. We also have these two levels that can reject prices. So probably we also see this kind of movement. Another pullback on the other level, and then we see the extension. Okay, this is an idea of what to expect from the market, because we have, I repeat, we have objective reference. Okay, it is something that price created in the higher time frames. So the level that we have in higher time frames obviously are very important, are much important, more important than recent levels. As you can see also here, you can find other oscillators. In this case, with this profile, it is stochastic, while on the second chart, we can find the MACD. The idea is always the same. When you see a green color, you know that it can be a good opportunity to buy. On the contrary, when you see red color, you can say that it is a good opportunity for selling. Of course, you need to see that price and the movement of price is the price is moving according to the suggestion. For example, in this case, GBP CAD is moving downward, and the stochastic oscillator is red. So we have a confirmation of the downward movement. But if we see, for example, with no, we don't have divergence in this example, but if price goes down, for example, we see a green oscillator, of course we see a divergence. So the case of divergence is always a case to pay attention, because it can anticipate a reversal. But I invite you to see all charts to see this. I finished this little presentation describing you this indicator. As you can see here, you can also find in this profile, you can also find an indication, a label that that specify what is the price action at this moment. You have outside the price action here because price went down over the last reference. Let's see CAD CHF. In this case, we have inside price action. Why? Because price is inside the monthly candlestick, the last monthly candlestick. EuroCAD is inside price action, also in this case, because the price is moving inside the monthly candlestick. This is the month of April. Okay, of course, okay. This is inside, many instruments inside, okay. But as you can see, this kind of information is, you receive this kind of information for each time frame. So when you work with the weekly reference for this, so when you use H4 time frame, you have a weekly information. So this week price is moving upward, referred to, is moving above the highs of last week. So we have a long price action. If we look at 1 hour chart, for example, we also have long price action. Why? Because price went above the highs of yesterday. We have a breakout of the highs of yesterday. Okay, so you also receive a clarification of what is happening. So let's close the webinar with this instrument, these buttons that you find here on the right of the chart. Its name is Timeframe Indicator. You can change the time frame from here, of course, but you also receive a very important information related to the trend. What is doing 1 minute candlestick, 5 minute candlestick, 15-minute candlestick, and so on up to 1 month candlestick. When you see orange button, in this case, we have a breakout, a short breakout. Let's see on an hourly time frame. In this case, the hourly candlestick is moving in breakout of recent lows. Okay, we break the lows of the recent candlestick, the recent hourly candlestick. The day is green, is green. In this case, the day is moving up, is moving above the recent highs, the highs of yesterday, of last candle. When you see dark red or dark green, it is a very special condition. In this case, we have a false breakout. For example, okay, now the color changed because we are touching the highs of last week. Let's see on 1 month. If you see 1 month, here the button is colored by dark green. It means that price break the lows of the recent candle and then reabsorbed it. It is a false breakout. It is green. Why? Because this condition, it's a good condition to buy because it anticipates the possibility of an upward movement. On the contrary, when you have a dark red button, this means that we have a false breakout of the recent highs. It is red. Why? Because it is a signal of reabsorption of recent highs, and so from there it can start a downward trend. We have a confirmation downward the trend. So looking at this button, I see what is doing all the market. I don't need to open 20 charts. I see everything from here. I have an indication of trend. I have a signal about the best opportunity for each instrument. And I also have indication about all the price action. And I also have indication about the momentum using the oscillator. If you don't like the oscillator that we choose, you can also manage them, you can change them. This indicator is called Algo MTF. Double click, and as you can see, you can choose among different kind of oscillator. You can also change the value, so you can customize the indicator, all the indicators as you prefer. Okay. So, do you have some questions? If you have questions, please write in the chat. Okay, just a moment, I cannot find the chat. More chat. Okay, no questions. Okay, so let's do some example in real time. What can we do? Let's work with with weekly references. For example, NZD-CHF is appreciating, right? Yes. We have an upward movement for this week. The price action says that from 4 hours until 1 day, we have a long price action. The mount is long too. And when you see light gray or light red, we don't have a breakout on this reference, but price is moving above the daily the opening price or below the opening price. So in this case, if we see the monthly candlestick, we see that the price is inside compared to recent month, but we are above the opening price. So come back to weekly references. In this case, price is moving upward. What can be the target? Maybe it will be the highs of last week. So can we buy? Depends on what information we can receive from other indicators. At this moment, we can see that there is a little uncertainty in on short time frames. So price at this moment is losing momentum. It's not so clear that price will go higher. But if we look at the higher time references, starting from 4-hour candlestick, we see that the price action is long. We have long on 4 hour, we have long on daily basis. So it could seem a good opportunity to buy, but we see that on a weekly reference, the weekly time frame, the candle in this case is the candle in this case absorbed the highs of last candlestick. So it is not sure that price will touch the highs of the last week. So maybe it's better to be quiet, of course, or to manage our position and enter a leader position in this case. Okay, because we have an indecision signal on a weekly reference. At this moment, we have a good signal for buying because the stochastic is green, but we know that it can be we can scalp at this moment. We can scalp, but we cannot manage a multi-day position, for example, because, as I said before, the weekly reference is absorbing the recent highs. So we need to have a confirmation from the weekly reference. Okay, so let's do another example. USDN, for example. USDN is moving upward, of course. We reabsorbed the maximum of last 4-hour candles. We have good signal for buying on a daily basis, on a weekly basis, on a monthly basis. We reabsorbed the lows, so there is a reversal signal. We have a little uncertainty in the intraday references, but as you can see where we are on the highs of last week. So it is normal that there is a little uncertainty. Price pull back to these recent highs, and now if it is a good momentum, the price can extend the movement ahead. We have good signals for long on greater time, on large references. We have a good momentum. We also have a good location for our trade, so we can also decide to buy. Where can we find a resistance here? We can find a resistance here on the highs of April. We have 42 pips. It's not it is good. It is a good opportunity, so we can try and so on. This is just a little example, but as I said before, we will see other example in the next webinars. So thank you very much for your participation. And I recommend you to contact SuperForex for all information about this tool, how to receive it. And you will receive the tool completely for free. So the only thing you need to do is open an account with SuperForex, and you will receive the tool one-click FX, where you can find also the tutorials that explain you how to use the tool. We also provide you with PDF where you can read all indication about how to use the tool, how to trade with it, and also we will do other webinars, as I said before. So thank you again, and bye-bye.